Wait. If you were given two different investment options, which would you choose? Investments whose prices rise very quickly, or boring investment but consistent? I will give you 10 seconds to choose the one that you think is the best.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
The right way investment, according to Warren Buffett, is investment that boringly and consistently growth. But why? So in this video, we will find out the reason why Warren Buffett prefers boring and consistent investments rather than trending investments. This is a very important knowledge for you to learn if you want to become a great investor like Warren Buffett. If you are still confused, then watch this video again so you can understand, because spending time for studying is better. Why are most people always attracted to investments that grow quickly? But Warren Buffett, one of the richest investors in the world, actually avoids that. It turns out that the reason Warren Buffett is not interested in trending investments is because he believes that the right investment is a long-term investment. Consistency and boredom are always present in Warren Buffett's life. This principle is what brought him to the point where he no longer needed to work to earn money. It sounds easy, but many people fail because they can't be consistent. If you are one of those people who fail at investing because you can't be consistent, try applying these two things to yourself. 1. When you buy a stock, think of it as buying a real company. If you think like this, then you will be more careful and wise in making decisions. You will also think twice when you want to buy other shares and will continue to be consistent with the one stock that you have analyzed. 2. You need to understand what margin of safety really means. Simply put, margin of safety is the gap between a stock's current price and its intrinsic value in the future. And if you're not familiar with intrinsic value yet, don't worry. By the end of this video, you'll clearly understand what intrinsic value is and how it applies to stocks. Now, we will first learn what mentality an investor needs. Warren Buffett once said that the stock market is a device for transferring money from the impatient to the patient. This means that as an investor, we must learn to be patient and control emotions to be able to win in the world of investment. It may feel difficult at first, but over time you will get used to it and become more patient than before. That's why no investor can become an expert overnight. It takes a process to become an expert investor. And now we will come to the most interesting part about what intrinsic value is. In short, the intrinsic value of a stock is its true worth based on the company's future performance and potential, not its current market price. Imagine you own a machine that can generate $20 million per year, and it can keep running for 5 years. Over that time, the machine will produce $100 million in total. That means the intrinsic value of the machine is $100 million. Now, if that same machine is being sold today for only $50 million, it's clearly undervalued because the current price doesn't reflect the value it will generate in the future. And when we identify the gap between the current price with the intrinsic value, that gap is what investors call the margin of safety, the concept we talked about earlier. From Warren Buffett, we can learn that to become an expert investor, it takes time and effort. No one can become an expert investor overnight. I hope that those of you who watch this video can feel the benefits and also become professional investors. Keep following this channel if you want to get other valuable knowledge from successful people in the world. Stay consistent and let's start your career.